President of INO.com and co-creator of MarketClub with your midday market update for Wednesday, the 1st of May. Hard to believe, but it's May. So what do they say? Sell in May and go away? Well, it could be true this month or this year. Let's see what happens. But this is the market that it keeps going up. And why does it keep going up? It's because of the Fed. Well, let's look at our portfolios, and you can see, starting with gold, we'll start with the gold, but the markets are going down. We've got gold and crude oil. Remember, we've been bearish on these markets, even though they've had a big rally here. You can see the rally, big down day today in gold. Part of the reason for that, in my opinion, is this. And this is a Fibonacci number. And you can see, drive from the highs, click there, pull it down. You can see there's 50%, 58%, right in that zone where it should have problems, overbought. You can just see it's overbought right here, turning down. I can see this getting down to the $1,400 level an ounce very easily. All of our trade triangles you can see right here, negative. Not a good sign for this market. Moving on to crude oil. Pretty much the same picture there. Big down day today. Trading around 90.50 on the June contract. We were very overbought, remember. And this is a correction in a bear market. All of our trade triangles are negative. We're looking for this market to actually take out the lows eventually and move down to $80 a barrel, which is the long-term support for this market. Let's just put this on a close-only chart, and let's just go back to the maximum. And you can see, we've shown you this before, but this is the long-term support we see for this market, right around $80. You can see how it's continually finding value there. I think the same thing will be true this time as well. So it looks like we're going to see this market come back under pressure. So let's see how that plays out. Moving on to our next market. This is the euro. And let's just scope this in a little bit further so we get a better picture. And you can see that the market actually hit a new high today. So our intermediate term trade triangle and our daily are positive, which is basically how we look at these markets. And remember, so here's the weekly telling us the trend. The intermediate term trend was positive. The longer term trend still remains negative in our tools. And you can see our last buy signal was right here, and that was at 130.82 on our short term indicator. A little bit overbought right now. Possible divergence, new highs. Hasn't been a new high in the Williams percentile. Let's watch that very carefully. So let's move on to the Dow. The Dow has been an incredible standout here. If you remember, we've been long the Dow from 1366, and here we are at 1793. 14,793. And we're looking for this market to probably, it's almost like a magnet pulling it up to 15,000 now. So you've got this move, the 14.4 up to 14.8, let's say, and that to me is going to be a situation. You've got 400 points that really propels it over 15,000. So let's see how this plays out. But very overbought. The markets are sort of coming back on the MACD. Looks like it's coming back. So again, the trend is your friend, and it's been this way for quite some time. You can see we kicked in here on the 22nd of January. So we've never changed our view on the Dow. Now on the NASDAQ, on the CME S&P 500 cash index, you can see we actually, let's just take, we don't need to have the Fibonacci on here. Let's just take that off. But you can see we just made new highs, and we do have a weekly. Everything's green there, but a little bit concerning today. We haven't really got momentum, and this is a possible negative divergence coming in here. So we'll see how this plays out. But generally speaking, the trend is your friend, and the trend remains positive for the equity markets here in the United States. Much the same with the NASDAQ, which turned positive 3 days ago, and that looks set to go higher. One interesting element here is the Amazon, all red triangles. Not a good sign. Here's one of the top retailers, and it's acting crazy bad. Now, what I mean by that, it looks like it can go lower, and I would not be out of place by saying we think this could go at least another $25 lower than we are right now. Maybe the 225, right around 230, 235, somewhere like that. But nonetheless, the trend is your friend, and this is almost like Apple-esque in the sense it's a great company, but nobody loves it anymore. So let's watch this very carefully and see what happens. Hey, this is Adam Hewison for MarketClub. I'll be back probably on Monday, Tuesday, because I'm traveling down out of town for a few days to see my new granddaughter. So I hope you all have a great trading day, and I'll see